Many people pay more than they need to for Medicare Part B and D, and they're not even aware that they're paying more. This is due to something called IRMA, Income-Related Monthly Adjusted Amount. And what this is an additional charge above the base premium due to higher income that is assessed to your monthly premiums based on your income. I have worked with countless people that have an IRMA, and I've been able to reduce and sometimes eliminate this additional charge. It can be a little bit of a complex situation, but it is possible. And I've helped countless individuals to eliminate or reduce their IRMA. If you don't know me yet, my name is Jane Petri. I'm a Medicare advisor, and I help hundreds of clients each year navigate the complexities of the Medicare program. My mission is to provide easily understood, unbiased, honest information which will help aid you in making the best decision for your Medicare coverage. In this video, I am going to explain exactly what an IRMA is, what your specific IRMA would be, and ways to eliminate it. This will save you lots of money in your monthly premiums. So let's get started. So what is an IRMA? The Medicare Income-Related Monthly Adjusted Amount. IRMA is an additional charge applied to people with higher incomes who are enrolled in Medicare Part A and Part D. This adjustment requires that beneficiaries with higher income contribute more towards their monthly Medicare cost. So put simply, like our tax returns, if you earn more, you pay a higher tax than people that earn less money. So this is an additional, almost like an upcharge, if you will, for your Medicare premiums. However, mistakes can occur in the IRMA determination process. It's important that you understand the process and what is used to determine the IRMA so that you can avoid paying additional money that you don't need to. So some of the most common mistakes are that when Social Security is determining what an IRMA would be for you, they use the incorrect income data because the IRMA, again, is based on your income reported on your 1040 IRS tax return. There's an error in the income by the IRS, which is provided to Social Security. Failure to report a life-changing event. If you don't report the life-changing event, this event that could potentially lower or eliminate your IRMA, the Social Security won't know about this. Therefore, it's important to report it. Failure to get the notice about your IRMA, the notice coming from Social Security. If you don't receive the notice and you're unaware that you have an IRMA, you don't know that you have the right to an appeal, which could eliminate or lower your IRMA amount. So let's get started. The initial determination, which is done by Social Security Administration to determine if you are going to pay an additional amount or the IRMA. The Social Security determines whether a Medicare beneficiary should pay an IRMA based on modified adjusted gross income, called the MAGI, which is reported on line 11 of your 1040 IRS tax form. The IRS and Social Security have a direct communication link, and the IRS sends your tax information to Social Security to use to determine if you will have an IRMA. This process involves the following steps. The IRS data. Social Security accesses the IRS and uses the information right off your federal tax return, which was provided to them by the IRS. The data is used from 2 years prior to the applicable year. So for example, if you're looking at your Medicare 2025 premium, Social Security is looking at your 1040, your IRS tax return from 2023. So it's a 2-year look back. The MAGI, the MAGI calculation, is calculated by adding certain deductions to your adjusted gross income, your AGI, which include tax-exempt interest and certain deductions from income earned abroad. That creates your MAGI, or your MAGI. Comparison of income thresholds. So the IRMA is based on different brackets of income. So the Social Security Administration compares individual or couple, depending on how you're filing your tax return. They look at the modified adjusted gross income as reported on your tax return against set income thresholds to determine if an IRMA is applicable and should be applied to your monthly premiums. The IRMA is calculated on Medicare Part B, which is the major medical, doctor's visits, outpatient services, etc., and Part D, the prescription drug plan. The amount of IRMA is on both Part B and Part D. The IRMA amount varies based on your income, and it's set up in brackets of certain ranges of income. They're adjusted annually for inflation, so I'm going to show you some tables that are going to show you the adjusted premiums based on the certain income brackets. So as you can see on the first line, it is based on whether you're filing an individual tax return or a joint tax return. So the threshold begins at the base rate, where you don't pay an IRMA. That is, if you're an individual, single, and you file a single tax return, the income cap, the maximum that you can earn, is up to $106,000 a year. That is your modified adjusted gross income. If you filed a joint tax return, the maximum is $212,000 per year. As you can see, the monthly premium, if you're within that bracket, would be the base rate. And for Medicare Part B, the base rate for 2025 is $185. But as you can see in the chart, you can see that it's going up in brackets. There are several different brackets of income. And the premium, you can see on the right-hand side, is increasing. That's because there's been an IRMA adjustment to the monthly premium based upon what your income is. The largest IRMA is for people that earn over $750,000, and that would bring your premium to $628.90 per month. Compare that to the base rate of $185. That's a significant amount of IRMA. And now we'll move on to Part D. And because Part D, prescription drug coverage, also has an IRMA, the same income criteria or brackets apply to the Part D. So again, if you're single, filing a single tax return, it's from 0 up to $106,000, or if you're a joint couple filing a tax return, it's 0 up to $212,000. That would be, there is no additional premium, no IRMA. As you can see, the last bracket, if you're an individual earning over $500,000, or a couple joint tax return earning over $750,000, the IRMA would be $85.80. Okay, obviously, this is a large additional amount, a large additional IRMA. Can it be eliminated or reduced? Let's explore more. So, IRMA determinations can be appealed based on qualifying events that significantly are reducing your income. They're called life-changing events. They're set by Social Security Administration, so you have to meet one of their set life-changing events. A list of qualifying events include marriage or divorce, death of a spouse, work stoppage or reduction, for example, retirement, loss of an income-producing property, but that's not due to a sale or transfer, loss from investments, or receipt of a settlement payment from a past or current employer. Here are 5 steps to appeal an initial IRMA determination. Step number 1, you've received the IRMA determination. You will receive the determination by the United States Postal Service, a letter that will come in the mail. The notice is from the Social Security Administration. It's called the initial determination. The initial determination notice will outline what the IRMA will be based on the applicable tax year. If the beneficiary, you, disagree with this determination, you have a right to an appeal. Step 2, understanding the rights for an appeal. The most common reasons for appealing an initial IRMA determination include a recent life-changing event which has lowered your income, an error in the income tax return, or a recent amendment that you've made to the tax return that was used for the initial determination. Step 3, the request for the appeal. The first formal process is to file an appeal. This must be done within 60 days after you receive the initial determination letter. The request can be made by completing and submitting Form SSA-44. This is my preference. This is what I do for all of my clients. I complete, with their assistance, Form SSA-44. I find by filling out this form, it is the most accurate way to submit the appeal. But the second option would be to submit a letter to SSA stating the reason for the appeal and include all relevant information. Step 4, submitting evidence, submitting the proof to your appeal. When you submit the appeal, it is critical to provide supporting documentation of your claim. This might include evidence of your life-changing event. For example, a marriage certificate, death certificate, if you become unemployed, your unemployment documentation, retirement documentation, etc. Also, you can submit an updated tax return if you had to amend that return due to incorrect information being used on the initial tax return. And finally, step 5, reconsideration by Social Security Administration. So they've received your appeal. After submitting a request for the appeal, a different Social Security Administration employee will review your case, examining your new evidence to determine if the appeal will be granted. Throughout the IRMA appeal process, it's critical that you must stay informed, watch for your mail, watch for correspondence from Social Security Administration. Make sure that you've got all your documentation, supporting evidence organized and available to submit to Social Security Administration should they ask for it. Within 60 days of Social Security receiving your appeal, you will receive notification again from Social Security Administration with your appeal decision. An IRMA appeal is one of my favorite things to do for my clients because it saves them money and it lowers their monthly premiums. And it's simple to do with the right guidance. I assist hundreds of clients with IRMA appeals every year. And if this applies to you and you have a higher Medicare Part B or Part D premium, you can contact me by email or through my website for a free consultation to see if an IRMA appeal is right for you. Thank you so much for watching. I hope you found this helpful. If you need help with an IRMA appeal, I hope to hear from you soon. And don't forget to subscribe so that you can watch other videos that'll help you save money and ease the process of Medicare.